Think about who it matters to most. It matters to the Fed, right? I mean, the Fed has to chart this interest rate policy next year. It's trying to figure out where the economy is going. One of the biggest ingredients in that is whether or not we have these tariffs. And that's what they're trying to figure out. And they're dealing with the most mercurial president on record. Where is this going to go? Only President Trump knows. And we're hearing conflicting signals from him and his team. So if you're Jay Powell trying to figure this out, you know the root of this is tariff policy.
Jimmy?
So he basically just agreed with me. That's actually the Fed. He kind of went there through the back door. But obviously, it's the Federal Reserve. It's the Fed overshooting that causes recessions. Trade conflicts don't cause recessions. Now, what matters to the market right now, I think, is a little different. I think people at least have a general feel about what the Fed is doing, generally what their thinking is. Who knows what the president's thinking is? Tons of uncertainty. Is there a deal? Is this just an election year stunt? What would a deal look like? Is it just more of what Mnuchin agreed to earlier this year? So the amount of uncertainty being generated by a trade, I think, is a significant market-moving action. Ultimately, it's the central bank.
Yeah, but Jim's, I think, actually agreeing with me now, talking about uncertainty. Yeah, I think he's actually making my case. It's not just.
Let me just one point, Brian.
Yeah.
Why I agree with Jimmy. So we have seen this trade fight escalate, and it hasn't really made a huge impact on the economic data yet. Maybe it will, maybe it won't. And yet the Fed's been raising interest rates since 2015, and now there is some anxiety about more rate hikes, and a lot of it's coming from the wage data and some of the other data that doesn't include tariffs or the trade war.
It's not that hard to chart a course of rate increases if there's not massive macro uncertainty. The problem is we're talking about $500 billion worth of tariffs potentially starting next January. And it's not just a market issue, by the way. Businesses care about that. These are input costs. These are investment plans. That kind of stuff does cause a recession.
I agree with Jimmy
P. It's not massive market.
Brian.
Come on.
No, hold on. Just take it easy, Brian. You got a great name, but let me get to I agree with Jimmy, but for a different reason. You know why? It's not interest rates, Jimmy. You're right. It's the Fed. You know what it is? It's deleveraging. We haven't talked about that at all. Yes, they're raising rates in an environment where they've also been delevering their balance sheet to a couple $100 billion a year.
Right. So you have this, historically massive balance sheet, and they're deleveraging, and they're raising interest rates, and trying to bring this economy in for a soft landing. Maybe they'll do it. Pretty darn tricky. But listen, I have to say, the major macro impact of the trade war, lots of companies, lots of sectors it can affect. But if you're talking about right now in the near to medium term, it's going to have a huge, massive impact on the economy. I think we're talking about a tenth or two of a percentage point, not a percentage point.
So, Brian, you are a professor. I think the point is this. Here's the point. History can be a guide in a lot of situations, but we've never had this. We've had the Fed raising rates, but we've never had the Fed raising rates in the history of modern America while also delevering a massive. So no one actually knows what's going to happen.
Totally agree with that. But we've also not had a trade issue with a president like this. So layer the two on. I mean, if you had
it's a bear on a unicycle on a high wire juggling chainsaws.
Imagine if you had Jay Powell sitting here right now and he was totally honest with you. He'd say the one thing that is making this so hard for me is I have no idea how to look at the economy next year with these tariffs. Are they going to go up even more? Are they going to get taken away? How do I chart monetary policy with that kind of macro uncertainty?